A nice bounce back.
James, a beautiful bounce back, up by 1.1%. It really was the defensives once again outperforming the consumer staples, the healthcare space, the telecom, the property space. All these sectors outperforming. In fact, Telstra having an absolutely brilliant day on the market. The highest price that we've seen for Telstra since June 2008. So a 5-year high for the stock. Now, Telstra still has a yield of 5.8%. Some of the regulatory concerns are fading away. But if we have a look at the telecom space, it wasn't just Telstra rallying today. We saw iiNet, it was up by 5%. We saw M2 Communications up by 5.2%. And TPG was up by 4.5%. So it doesn't seem to be just a yield theme on the market. Rather, it seems to be a theme of defensive stocks really being in favour. Now, Telstra's had an absolutely brilliant run, up by a massive 43% in the last 52 weeks. But if you have a look at some of these smaller telecommunication companies, iiNet, TPG, they're up 100% over the last 52 weeks. And M2 Communications, stock code MTU, is up by 75%. So it does look like it's all about safety, it's all about defensives, despite this move up that we've seen in terms of the market. In fact, if we have a look at blue chips, this was a blue chip day. Suncorp Metway up more than 3%. We saw Wesfarmers up almost 3%. Gaining more than 2%, we saw the likes of Telstra, we saw Woolworths, we saw Brambles, and we saw CSL as well. In fact, the places that you didn't want to be, the top 20 blue chips, were 4 stocks, and they were Woodside Petroleum, Santos, BHP and Rio Tinto. So really, that mining side of town putting a bit of a break on the Aussie market. We did see the energy and the materials sector underperforming, and that's despite materials really leading the way on the US markets. It was the best performing sector on the S&P 500. Part of that was what was happening in terms of the Shanghai Composite. We did see it down during our session. That seemed to have a negative impact. But all in all, a great day on the Aussie market, really being driven by that defensive side of town.
It's interesting to see where the equity buying is happening, and you made mention of yourself, it is the defensive, so there is a degree of caution there still amongst investors who are in equities.
And I think that caution is understandable given the roller coaster ride that we've seen in the commodity space. I mean, gold is being the key commodity that we've been watching this week, and it's been an absolutely gut-wrenching ride for a lot of investors in this space. Now, we did see gold prices bouncing back a little bit, but really it was Newcrest which managed to gain around about 0.2%, I think, by the end of the market. But the smaller gold players, we were still seeing some losses there. It's just that we weren't seeing the double-digit losses that we've been seeing over the last couple of sessions. So a little bit of stabilisation in gold, but given the roller coaster ride that we've seen in commodities, investors understandably looking at other sectors, and it does look like the sectors that they are looking at are the defensive. So, you know, we've got zero interest rate policies over in Japan as well as the US. The money has to go somewhere. However, commodities, it's just a bit too volatile, so it looks like the defensive's still the place to be.